In this video trade, we're going to look at what is a sympathy play. Stay tuned. Hey guys, warm welcome to you. Alright, so what is a sympathy play, or as I like to call it, a second tier play? But I know that some of the prop guys in New York and London call this a sympathy play. Well, specifically the New York guys actually, because the London guys don't really trade stocks so much. But anyway, what is a sympathy play? Let's understand it and work out and see if we can use it as part of your trading strategy arsenal. Okay, so the sympathy play is pretty much as it says on the tin, right? You've got stock A, which is doing this, and let's go with the purple. Stock A has come out, and let's say it's got some good news and it's gapped up. There's the gap, and let's say that gap is 5%, and it's started to rally because the news is significant, and it's got a good, nice strength move into the midday kind of time period. And so stock B is in the same sector, so there's a similarity there. They're in the same sector, they kind of have the same customers, they have the same business model. There's a similarity with it. So it could be, you know, oil sector, maybe it's something, a supermarket, maybe it's a courier, maybe it's some kind of tech, maybe it's some kind of Uber versus Lyft, you know, anything like this, there's a similarity there. And so stock A is buoyed by whatever it may be. It doesn't necessarily have to have a catalyst of earnings, but just for simplicity, it makes it kind of makes sense with this. It's buoyed by some sort of good news, and there's a nice drive on it. So the sympathy play is to look at stock B, and stock B, not P, doesn't have the direct input from stock A, but the sympathy play is to say, well, actually, you know, stock B is likely to receive some inflow, some demand from this because it's got similarities with stock A. So as a trader, what would you do? You would say, right, well, I've got a long bias on stock B. Whilst stock A is trading nicely in an uptrend, rather than going directly to the first tier play, I will trade a second tier play. And if you go and check out a previous video I've done, I've talked about how 15 years ago, maybe not quite that, 12 years ago, traded mining stocks on the London Stock Exchange, and this was a real go-to strategy for me, trading these second tier miners when the first tier miners were moving. And so it's a very valid strategy, and you can adjust it and tweak it, not from just a day-to-day but for earning cycles as well. Anyway, back to the point. So stock A is rising. Stock B, you're using stock A as a proxy, you're having a long bias, you're still timing stuff, so maybe this thing's a little bit slower to move, maybe now it's pulling back, stock A is still ripping up, you know that it's a sympathy play, you know that that's something you'd like to take anyway, that'll pull back to a downtrend line around here, you know that this is all ticking boxes as it is, you know the risk is fine, but you've got the added weight of the stock A boosting the whole thing, and if that's still continuing on its uptrend, this is the greatest buy. I wouldn't say the greatest buy ever, that's a big extreme, isn't it? It's a good buy, right? Because not only is it setting up nicely for you, it's also got the wind behind it with stock A. And the same with the downside, guys. You know, you're basically mirroring the move of the primary market. So the primary market in this instance is stock A because it's got that news, and you're trading with stock B. Now, the kind of pitfalls I see that people do, and, you know, made these mistakes myself and definitely have got a much more structured approach to it now, is that you don't use a setup with it. You say, well, it's going up, so I'm going to buy stock B. That's not enough. You still need to have your filters, your triggers, whatever in play, however you kind of categorize your setups yourself. You need to know, hey, well, I can manage my risk still. I still think it's a long. I can't just buy the thing because it could still pull back heavily if that stagnates, because the likely thing actually sometimes is that this might stagnate, or if this pulls back a bit, this one might pull back even heavier. So you've got to be careful about it. You can't just buy it just because that's going up. You still have to manage your risk. You still have to have a point where you want to execute your trade with precision, you know, to where to put your stop loss, all those kind of things that are the basics of trading. You don't want to just be stabbing at it just because that's going up. But if you have got good setups that work and you have this, the wind behind it, you're going to start to increase the grade of the trade. You're going to start to improve the quality. Maybe then you start to put more chips on the table. Maybe then you start to put more of a position into this because you've got that added edge of the weight behind it, the supply and demand being in balance with the sector as a whole. And you've got your setup that you know is good, and you can see now how the sympathy play can work for you. And why would you trade this instead of trading the primary? Well, you could say the primary is maybe too volatile. Maybe the primary one is not the kind of price range for you. Maybe you feel like it's a little bit too active. Maybe you feel like it's not setting up on the daily as nice as you'd like, but this one's a little bit better, and you maybe got a choice of 2 or 3 of them from this, so you can perhaps pick the one that suits your trading style, your strategy, your setup, etc. Anyway guys, that is a sympathy play. Whatever you do, keep this managed, and I'll see you in the next one. Bye bye.